Investors are braced for another turbulent day on Wall Street on Friday. The data on personal spending and the PCE price index set the tone for the market. These metrics are preferable gauge for the Federal Reserve. Thus, they are of major importance for stock investors. The macroeconomic data released yesterday did not soothe investors but proved the resilience of the US economy and the health of the labor market. Curiously, the benchmark stock indexes finished the session in the green. The Dow Jones rebounded by 108 points, or 0.33%. The Nasdaq added 0.72%. The S&P 500 gained 0.53% to close at 4,012 points. Wall Street indexes traded sluggishly in the New York pre-market. They shed 0.7% and extended the losses after the publication of the fresh personal spending data. The three indexes lost 0.9 and 1.4% in the early New York session. The S&P 500 is expected to trade in the intraday corridor between 3,870 and 3,990 points. Stock markets worldwide have been volatile. They retreated in February after a strong January when investors speculated on the Fed's further policy moves. Hawkish remarks by Fed's policymakers were complemented by upbeat macroeconomic data. Yesterday, the U.S. Labor Department reported that the number of first-time unemployment claims unexpectedly declined last week. It indicates tight conditions in the labor market. In a separate report, the U.S. economy logged steady growth in the fourth quarter, though the bulk of economic growth comes from a growing inventories. In a revised reading, the U.S. national economic output expanded by 2.7%, sequentially in the final quarter last year. The second estimate suggested a stronger increase of 2.9%. Interestingly, both Wall Street bulls and bears found enough evidence in February supporting their strategies and outlooks. The U.S. stock market was propped up by corporate news and the rally in the oil market yesterday. Nvidia reported a solid profit and jumped by 14% because the sales revenue forecast for the first quarter surpassed the median forecast. Besides, the company said that its chips would be used for artificial intelligence. Stocks of other chip manufacturers such as Broadcom, Intel, and Qualcomm also gained ground. Stocks of the telecom sector incurred the biggest losses of 0.7%. It was the fifth day of losses. Netflix shares dropped by 3.4% after the company said it would cut subscription fees for its streaming service in 30 countries. eBay shares logged the sharpest intraday drop since September 13. Its market worth plunged by 5.2% after the company warned about weak demand in the first half of 2023. Moderna shares slumped by 6.7% to the lowest level since November after the vaccine producer confirmed its sales forecast at $5 billion for the year, despite the fact that the sales in the fourth quarter were beyond expectations. Investors expressed risk aversion in the pre-market on Friday. Stocks of the US companies with a mega capitalization, such as Tesla, Amazon, and Nvidia, lost almost 1% before the opening bell. Boeing shares stumbled by 3% after the Federal Aviation Administration reported that the U.S. plane maker temporarily halted deliveries of its 787 Dreamliner aircraft. The macroeconomic data released today overshadows all corporate news. Personnel spending in the United States rose by 1.8% in January from a month ago. having rebounded after 0.1% downtick in December. The figure is much stronger than the expected 1.3% increase. It's the biggest growth since March 2021, thus proving robust consumer activity despite high inflation and rising borrowing costs. Personal income grew by 0.6% in January, having expanded following a 0.3% increase in the previous months. However, the reading undershot the consensus of a 1% growth. The market certainly gives priority to personal spending, which looks like a hard-binder to stocks. With such robust figures and upbeat previous data, Wall Street abandoned hopes for the uptrend. Fed's officials Loretta Mester and Susan Collins are due to speak later today. The US dollar climbed to the highest level in 7 weeks against major currencies. Ahead of the PCE index, the US dollar index is flexing its muscles, having risen by 0.33% intraday. The instrument is trading at 104.93 at the time of recording this video, and the intraday corridor is determined between 104.80 and 105.70. Strong hiring in the United States and the hawkish rhetoric of the Fed officials about aggressive rate hikes enabled the US dollar to recover its losses incurred at the beginning of the year. The US dollar is on a track to close with gains for 4 weeks straight. The instrument has rebounded by 2.5% this month. It means that stock investors have revised the prospects of the Fed's agenda for 2023. The macroeconomic data released this week highlights the strength of the US economy, which opens the door to high inflation. Now, investors project that the federal funds rate will reach its peak at 5.35% in July and remain at the levels above 5% until the year end. There is a slim chance for a reversal in the Fed's rhetoric and rate cuts in 2023. The medium-term outlook for the US dollar is clearly bullish, at least until macroeconomic data does not lock disinflation. Anyway, the US currency is likely to settle at elevated levels, if not print a higher high of 2022. The Canadian dollar is bruised by its strong American rival. The USD card faces trading higher, having grown by 0.4% intraday. The currency pays trading at about 1.3596. The instrument is expected to trade within the intraday corridor between 1.3540 and 1.3640. The US dollar strength pushed the loonie to the weakest levels of the year. A recovery in oil prices did not matter a lot to the Canadian dollar. Oil prices have been growing for the second session in a row, but the global energy outlook is still obscure. Brent crude futures climbed by 0.8% to trade at $82.90 a barrel. WTI futures rose by 0.7%. Yesterday, the benchmark oil grade surged roughly by 2% because of Russia's plans to cut oil exports from its western ports by 25% in March. It will be a sharper contraction than previously reported cuts by 500,000 barrels per day. Besides, higher than expected oil inventories in the US challenge the outlook for oil demand. Crude inventories in the US expanded by 7.6 million barrels to about 479 million barrels last week. JP Morgan said that oil prices are likely to decline to $70 a barrel in the short term. A rally is unrealistic. Brent crude is now trading 14% lower than a year ago. Bitcoin tumbled by nearly 2% in the last 24 hours. It traded below 24,000 today. After a 0.2% uptick, the token is trading at about $23,900 at the time of preparing video. It came to stand still ahead of the consumer activity data. Ethereum, Solana, Ripple and Litecoin are trading mixed in narrow ranges today. And the risk of mood does not benefit crypto assets. The IMF presented the draft. the global lender, is discussing the measures of efficient policy on cryptocurrencies that provides guidance to IMF member countries on the key elements of an appropriate policy response to crypto assets. The main recommendation is to safeguard monetary sovereignty and stability by strengthening monetary policy frameworks and do not grant crypto assets official currency or legal tender status. The market was immune to the draft document being focused on the US economic calendar. The intraday outlook is a wide corridor between $23,300 and $24,500. Good luck in your trading before the weekend and see you next week.